Given the price history and forecast for Bitcoin, a cautious short-term strategy appears most appropriate. Price has shown a downward trend in recent weeks, and the forecast suggests further decline. The support price of $57,372.0 acts as a crucial level to watch. A short position could be initiated if the price decisively breaks below this level. An entry price around $60,500 would allow for a potential profit if the price moves towards the forecast's lower end. A stop loss could be set at $61,500 to limit potential losses if the price unexpectedly rallies. The target price could be around $59,000, aiming to capture a portion of the expected downward movement. This strategy emphasizes risk management with a tight stop loss and a realistic profit target based on the forecast. Based on the Ethereum price history and forecast, a cautious approach with a medium-term investment perspective appears suitable. The historical price data reveals a downward trend, with the price fluctuating around the $2,400 level. The forecast indicates further decline, suggesting a bearish sentiment in the short term. However, the support price at $2,370.34 indicates a potential floor for the price, suggesting a possible rebound in the medium term. Therefore, a long position is recommended with a cautious approach. The entry price should be around $2,380, slightly above the support price, allowing for some room for price correction. The stop loss should be set at $2,370, just below the support level, to minimize potential losses. Target price can be set at $2,440, aiming for a moderate gain as the price potentially rebounds towards the resistance level. This strategy allows for capitalizing on a potential medium-term rebound while mitigating risk through a well-defined stop loss. Based on the provided historical price data and the forecast for Solana, a cautious investment strategy is recommended. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. Although the support price is at $131.5, the current price is close to the support level, suggesting a potential for further downward movement. Given this bearish outlook, a short position is advisable. An entry price of $140, aligning with the current price, would be appropriate. The stop loss should be set at $143, slightly above the current price to minimize risk. The target price should be set at $132, below the support level, allowing for potential profit from the anticipated price decline. This strategy focuses on capitalizing on the potential downside movement of Solana, while managing risk through a well-defined stop loss. Based on the provided Ripple data, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, and the forecast predicts further declines. While the support price of $0.5245 offers a potential floor, the resistance level of $0.5973 suggests a significant barrier to upward movement. Therefore, a short position on Ripple is recommended. An entry price of $0.535, slightly above the current price and below the forecast, allows for a quick entry into the trade. The stop loss should be set at $0.545, providing a buffer against unexpected price surges. The target price should be $0.515, aiming to capitalize on the predicted price decline while staying conservative. This strategy aims to capitalize on the short-term bearish momentum of Ripple while managing risk effectively. Given the historical price trend of Cardano, which shows a consistent downward movement over the past 2 weeks, coupled with the bearish forecast indicating further declines in the coming week, a short-term bearish strategy appears to be the most suitable approach. The forecast suggests Cardano could drop from its current price towards the support level of $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. 3 $0.3393. Therefore, an aggressive short-term investment strategy for Cardano would involve entering a short position at the current price, around $0.34, with a stop loss set at $0.35 to minimize potential losses if the price unexpectedly rallies. The target price would be set at $0.335, aiming to capitalize on the anticipated price decline while staying above the support level. This strategy aims to profit from the short-term, bearish momentum predicted by the price data and forecast. Based on the provided price information for SU, a medium-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend with both upward and downward movements. The forecast suggests a continued upward trajectory, with prices potentially reaching $1.97 within the next week. However, the resistance level at $1.8424 indicates a potential ceiling for short-term gains. Therefore, a long position is recommended for a medium-term investment horizon. An entry price of $1.80, slightly below the current price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $1.7419. The support price, to limit potential losses. The target price can be set at $1.97, aligning with the forecast and allowing for a reasonable profit margin. This strategy balances risk and reward, aiming to capitalize on the expected upward momentum, while mitigating potential downside through a well-defined stop loss. Filecoin's 2-week price change reveals a downward trend, aligning with the forecast predicting further declines. While the price hovers near the support level of $3.498, the forecast suggests a potential drop to $3.4. This bearish outlook in the short term indicates a suitable strategy for a short position. To capitalize on this anticipated decline, an aggressive short-term investment strategy would involve entering a short position at the current market price of around $3.54. The stop loss should be set at $3.64 to mitigate risk in case of an unexpected price surge. The target price should be set at $3.4, aiming to profit from the predicted price drop. This strategy leverages the current price trend and forecast to potentially generate short-term gains by profiting from a decline in Filecoin's price. Based on the provided information for ThetaNetwork, a short-term bearish strategy appears most suitable. The 2-week price history reveals a consistent downward trend, with the forecast projecting further declines. The current price sits near the resistance level of $1.478, indicating a potential for a pullback. A short position allows you to capitalize on this anticipated decline. An entry price of $1.34, slightly above the current price, provides a margin of safety while aligning with the bearish forecast. The stop loss should be set at $1.40, safeguarding against unexpected price rallies. Target price could be set at $1.18, aligning with the forecast and offering a reasonable profit potential before reaching the support level. Based on the provided data for Dogwifhat, a short-term investment strategy appears promising. The historical price data reveals a fluctuating trend, with recent prices hovering around $2.3, $2.4. The forecast indicates a slight upward movement, with prices projected to reach $2.5 in the coming week. This suggests a potential for short-term gains. Therefore, an aggressive strategy would involve taking a long position on Dogwifhat. A suitable entry price would be around $2.3, aligning with the current market price. The stop loss should be set at $2.2, protecting against a sudden downturn. The target price could be set at $2.5, aiming to capitalize on the forecasted price increase. This strategy capitalizes on the anticipated upward momentum, while managing risk through a well-defined stop loss. Based on the provided historical price data and the forecast for Stellar, a short-term bearish investment strategy appears prudent. The historical prices indicate a downward trend over the past 2 weeks, with the forecast suggesting further declines. The current price is hovering near the support level of $0.0897, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, around $0.0902. A stop-loss order should be placed at $0.0919, slightly above the recent highs, to limit potential losses. The target price for this short position could be set at $0.0897. Aiming to profit from the potential decline towards the support level. This strategy capitalizes on the bearish sentiment indicated by both the historical price data and the forecast, aiming for a quick profit within a short time frame. Based on the provided price history and forecast for Starknet, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a downward trend over the past 2 weeks, with the forecast indicating continued decline. The support price sits at $0.3749, suggesting a potential floor for the price. However, the resistance level at $0.412 indicates limited upward potential in the near term. Given this outlook, a short position would be advisable. An aggressive short-term strategy could involve entering a short position at the current price of approximately $0.39, with a stop-loss set at $0.405 to limit potential losses. The target price would be $0.375. Aiming to capitalize on the anticipated price decline towards the support level. This strategy leverages the bearish sentiment indicated by the price history and forecast, while incorporating risk management measures to protect against unexpected price reversals. Given the price trends and forecast for Pendle, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a recent downward trend, with the forecast suggesting further declines. The support price is at $3.72, indicating a potential floor for the price. The resistance level is at $3.87, suggesting an upper limit for potential upward movement. Considering these factors, a short position is recommended for a short-term investment strategy. An entry price of $3.85 would allow you to capitalize on the potential downward movement. The stop loss should be set at $3.90 to protect against any unexpected price surges. The target price should be set at $3.68, aligning with the forecast and providing a reasonable profit margin before reaching the support level. Based on the provided price information for render, a short-term bearish investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a consistent downward trend, and the forecast predicts further declines over the next week. The current price is hovering near the resistance level of $5.428, suggesting a potential for a pullback. A short position at the entry price of $5.40 would allow you to capitalize on this anticipated decline. To manage risk, a stop-loss order should be placed at $5.50, slightly above the entry price, to limit potential losses if the price unexpectedly surges. The target price for this short position should be set at $5.10, aligning with the forecast predicted lows. This strategy aims to profit from the short-term bearish momentum in render, while employing risk management techniques to protect against adverse price movements. Given the price trends and forecast for VeChain, cautious investment strategy would focus on a medium-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The current price is near its support level of $0.02095, suggesting a potential for a short-term bounce. However, the resistance level at $0.02326 indicates that significant upward movement is unlikely in the near future. Therefore, a medium-term approach allows for potential upside if VeChain manages to break above the resistance level, while mitigating the risk of further downside if the forecast proves accurate. A suitable entry price would be $0.0215, slightly above the support level, allowing for some margin of safety. The stop loss should be placed at $0.02095, aligning with the support price, to minimize potential losses. The target price could be set at $0.023, aiming for a moderate gain if VeChain experiences a short-term rally. Given the price trends and forecast for Binancecoin, a short-term investment strategy is recommended. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $530.5, while the resistance is at $582.1. This suggests that Binancecoin may continue to move downwards in the short term. Therefore, a short position is advisable. An entry price of $570, aligning with the current price and the forecast, would be suitable. The stop loss should be set at $578 to protect against any unexpected price recovery. Target price should be set at $545, slightly above the support price, allowing you to take profits before the market hits major support. Based on the provided price history and forecast for Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility, but the overall trend has been relatively sideways. The forecast suggests a slight downward movement in the coming week, hovering around the $0.170 mark. This indicates a potential for short-term consolidation or a minor dip. Given this outlook, a long position is not immediately advisable due to the potential for further decline. However, the support price at $0.1448 offers a strong base. Therefore, a strategy involving a long position could be implemented at a slightly lower price, closer to the support level, with a stop loss placed below the support to mitigate risk. The target price could be set at the resistance level of $0.1953, aiming for a moderate upside potential. This approach allows for a potential profit if the price rebounds, while the stop loss protects against further downward movement. This strategy allows for a balance between risk and potential reward, aligning with a medium-term investment horizon. Based on the provided information for Worldcoin, a short-term bearish strategy appears most suitable. The 2-week price history reveals a downward trend, and the 1-week forecast anticipates further declines. The forecast suggests a potential drop from the current price to as low as $1.62. This aligns with the historical price movement and indicates a possible continuation of the bearish trend. Therefore, an aggressive short-term investment strategy would involve entering a short position at $1.86, the current price, with a stop loss set at $1.94, slightly above the immediate resistance level. This stop loss protects against unexpected price surges. The target price should be set at $1.65, aiming to capture a significant portion of the anticipated decline, while staying above the support level of $1.374. This strategy capitalizes on the short-term bearish momentum and aims to generate profits from the expected price decrease. Based on the provided Avalanche price information, a cautious investment strategy is recommended. The 2-week price history shows a downward trend, and the forecast predicts continued consolidation around the $26 level. The support price is at $25.62, indicating a potential floor for the price. Given this information, a short-term position is advisable. To execute this strategy, enter a short position at the current market price, which is close to the upper end of the predicted range. Set a stop loss at $26.95, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $25.62, the support level, aiming to capture the anticipated downward movement. This strategy aims to capitalize on the short-term bearish outlook for Avalanche while managing risk through a defined stop loss. Based on the provided price history and forecast for Jupiter, a cautious medium-term investment strategy appears most suitable. The historical price data shows a clear downward trend, with the recent price hovering near the support level of $0.7273. The forecast also suggests a continued decline in price over the next week, reaching as low as $0.719. This bearish outlook, coupled with the proximity to the support level, indicates a potential for further downward movement. Therefore, short position on Jupiter is recommended for a medium short-term investment horizon. An entry price around $0.74, slightly above the current price, allows for a small margin of safety while still capturing potential downside movement. The stop loss should be set at $0.758, above the recent high and the first resistance level. To minimize risk, the target price can be set at $0.71, slightly above the predicted lowest price, aiming to capitalize on the anticipated decline while leaving room for potential price fluctuations. This strategy aims to balance risk and reward by capitalizing on the bearish sentiment while protecting against significant losses. Based on the provided EOS price information, a cautious investment strategy would be most suitable. The historical prices show a consistent downward trend over the past 2 weeks, and the forecast indicates further declines. The support price sits at $0.4567, while the resistance is at $0.5401. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.475, slightly above the current price, would allow for some room for price fluctuation before entering the short position. The stop loss should be set at $0.485 to protect against any unexpected price recovery. The target price should be set at $0.45, aligning with the forecast and providing a reasonable profit margin before reaching the support level. This strategy emphasizes risk management and capital preservation, taking advantage of the current market conditions while mitigating potential losses. Based on the provided TRON price history and forecast, a medium-term investment strategy appears to be the most suitable approach. Price has been fluctuating within a relatively narrow range, indicating a period of consolidation. The forecast suggests a slight upward trend, with prices potentially reaching $0.16. This indicates a potential for modest gains in the coming weeks. Therefore, a long position on TRON is recommended. An entry price of $0.158 could be considered, aligning with the current price and allowing for some room for price appreciation. The stop loss should be set at $0.1577, slightly below the support price, to limit potential losses. The target price could be set at $0.1605, aiming to capture the potential upside towards the resistance level. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Based on the provided data for Coin, a short-term investment strategy appears most suitable. The price history demonstrates a recent decline, and the forecast predicts further downward movement. The support price at $0.4038 indicates a potential floor for the price, while the resistance at $0.4386 suggests limited upside potential. Considering this bearish outlook, a short position would be the preferred approach. To implement this strategy, an entry price of $0.430 could be utilized, allowing for a small margin above the current price. The stop loss should be set at $0.440 to protect against any unexpected price surges. The target price could be set at $0.400, aiming to capture a portion of the anticipated decline towards the support level. This strategy capitalizes on the short-term bearish trend while managing risk through a well-defined stop loss. Given the provided price information for ShibaInu, a cautious investment strategy is recommended. The 2-week price history reveals a downward trend, with the forecast projecting further declines. The historical prices show a consistent downward trajectory, with the current price hovering near the support level of $0.00000150, the resistance level at $0.000192 suggests limited upward potential. Therefore, a short position on ShibaInu is advisable for a short-term investment perspective. An entry price around $0.00000175, aligning with the recent price action and the forecast, would be suitable. A stop-loss order should be placed at $0.00000181 to mitigate potential losses if the price unexpectedly rises. The target price can be set at $0.00000162, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management while seeking to capitalize on the prevailing bearish sentiment. Given the current price trend and the forecast for Dogecoin, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a downward trend, with the forecast suggesting further declines. The support price is at $0.1009, indicating a potential floor for the price. However, the resistance is at $0.10714, suggesting limited upside potential. Considering these factors, a short position appears to be the most advantageous strategy. To execute this strategy, an entry price of $0.107 would allow you to capitalize on a potential decline towards the support level. The stop loss should be set at $0.111 to protect against any unexpected price surges. The target price should be set at $0.101, aiming to capture a portion of the anticipated downward movement. This strategy allows for a relatively quick turnaround, aiming to profit from the anticipated short-term price decline in Dogecoin. HookedProtocol's recent price history shows a downward trend, with the forecast suggesting further declines. The historical prices indicate a consistent downward movement, with the current price hovering near the support level of $0.4232. The forecast prices further support this bearish outlook, projecting a decline from the current price towards $0.416. Given this analysis, a short position on HookedProtocol appears to be the most suitable strategy. To implement this strategy, we propose an entry price of $0.431, aligning with the recent price action. The stop loss should be set at $0.439 to protect against any unexpected upward price movement. The target price should be set at $0.417, taking advantage of the projected price decline. This short-term strategy capitalizes on the anticipated downward momentum of HookedProtocol, aiming to profit from the potential price drop towards the support level. Based on the provided price history and forecast for Aevo, a short-term bearish investment strategy appears most suitable. The historical price data shows a downward trend, and the forecast predicts further declines in the coming week. The price is currently hovering near the support level of $0.3192, indicating a potential for further downward movement. Therefore, I recommend a short position on Aevo. An aggressive entry price could be around $0.336, aligning with the recent price action and the forecast, setting a stop-loss order at $0.3454. The resistance level would help mitigate potential losses if the price unexpectedly rises. A target price of $0.3192. The support level would allow for capturing potential profits from the anticipated decline. This strategy capitalizes on the short-term bearish outlook and aims to profit from the potential price drop towards the support level. Based on the provided price information for Notcoin, a short-term bearish investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a consistent downward trend, and the forecast predicts further declines in the coming week, while the support price is at $0.007249. The historical prices have been consistently falling below this level, suggesting a weakening support. The resistance price at $0.00785 further reinforces the bearish outlook, indicating limited upside potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, around $0.00741. A stop-loss order should be placed at $0.00785 to mitigate potential losses if the price unexpectedly rises. The target price for this short position would be $0.007249, aiming to capitalize on the anticipated price decline towards the support level. This strategy leverages the current bearish momentum and the forecast for further price drops, aiming for a quick profit within a short time frame. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with recent declines, and the forecast indicates further potential drops. The support price is at $0.01868, suggesting a potential floor for the price. However, the resistance level at $0.02005 indicates a potential ceiling for upward movement. Considering these factors, a short position would be advisable to capitalize on the anticipated decline in prices. An entry price of $0.0195 aligns with the current price and recent price action. The stop loss should be set at $0.0201 to protect against any unexpected price recovery. The target price should be set at $0.0185, slightly above the support level, allowing you to take profits before the market potentially bounces. This strategy allows for potential profits from the short-term price decline while minimizing risk with a defined stop-loss order. Based on the provided price history and forecast for Pepecoin, a cautious investment strategy is recommended. The 2-week price change reveals a downward trend, and the forecast suggests further declines. The current price is hovering near the support level, indicating potential for further downside movement. Given this bearish outlook, a short position seems more suitable than a long position. For this short-term strategy, an entry price around $0.0000928 would be appropriate, aligning with the recent price dip. The stop loss should be set slightly above the current price at $0.0000930 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.0000906, aiming to capitalize on the forecasted decline towards the lower end of the predicted range. This approach allows for potential profit while managing risk effectively in the short term.